While attending the Berkshire Hathaway Annual Meeting this weekend, Warren Buffett dropped an absolute bomb on us. Cash and US Treasury bills in Berkshire had fallen from $144 billion to $103 billion after increasing every year for many years. And this was primarily caused by a significant amount of cash spent on US equities, $52 billion purchased and $10 billion sold. And while we don't have a 13F filing that will ultimately give us a detailed view of what Berkshire and Warren Buffett were spending money on during the last quarter, Buffett spoke about some of the different purchases during the annual meeting, so we do have a pretty good idea about what he bought and in some cases how much. In today's video, I'm simply going to be breaking down some of the purchases made by Warren Buffett and Berkshire Hathaway during the latest quarter with the help of some clips from the Berkshire Hathaway Annual Meeting. Just before we get into today's video, I do want to give a quick shout out to today's sponsor, which is SHARESIGHT, a portfolio tracking software that you can use to keep track of your stock portfolio gains, as well as track all kinds of things in regards to your performance of your portfolio, diversification, and when it comes to tax time. SHARESIGHT allows you to automatically bring in all of your past trades by connecting your broker, or you can do it manually or using Excel. And once you do, you will be able to accurately track all of the different types of gains that your portfolio will experience, including currency gains, which most people are not accurately tracking. SHARESIGHT gives you access to 12 different reports that can be used to track performance, as well as used when it comes to tax time. One of my favorites at the moment is the diversity report, which can of course be used to see how your portfolio breaks down in terms of different industries and sectors. But also for a value investor like myself, it allows me to get an insight into how much of my portfolio is concentrated in individual businesses. At the moment, you can try SHARESIGHT for free and track up to 10 holdings for as long as you want. So if you haven't tried SHARESIGHT, it's completely free. Go ahead and check it out. Also, if you want to sign up to a paid plan for more features, there's a starter, investor, and expert plan. And if you use my link, it's the first link in the description below, you will get 4 months off an annual subscription, which is a massive saving. But at the very least, go and check out the free plan and try it for as long as you want. You might have noticed, but I'm not in my typical setup, and that's because I'm here in Omaha attending the Berkshire Hathaway Annual Meeting, and that's exactly what we did just yesterday. By far the biggest story out of the meeting was the huge decrease in cash during the period. Cash and treasury bills decreased from $144 billion to $103 billion. When thinking about cash for Berkshire Hathaway, and really for most businesses, we include US treasury bills, and that's because they act in a very, very similar way to cash, except with an interest payment attached to them. US treasury bills are short-term fixed income securities that are issued by the US government. They have a maturity that can go from just a few days all the way up to a year, and since the US is very unlikely to default or not pay on those bills, they act very, very similarly to cash. There are many things that could change the cash position in a business, things like the operations of the business, how much they spend on capital expenditure, on property and buildings, what investments or acquisitions they might make, and whether they pay dividends or do share repurchases. For Berkshire, we're just going to focus on some of the biggest impactors to their cash position. Firstly, their business operations generated $6.8 billion of operating cash flow, which obviously contributed to an increase in their cash position during the period. They spent $51 billion on equity securities or stocks. They sold $10 billion worth of equities. And then the last big contributor was they spent $3.2 billion on what's called acquisition of treasury stock, which is a fancy way of saying share repurchases. Clearly, the biggest contributor to why cash went down by about $40 billion was that they spent over $50 billion on equity securities. But can we see exactly what and how much Berkshire spent on particular stocks? No, we can't. In fact, those details are included in the quarterly 13F filing, which is a filing that institutional investors with over $100 million in assets under management have to make, and they can make the filing up to 45 days after the quarter ends. So it's likely we will see this come out for Berkshire probably on the 14th or 15th of May. Fortunately, we do have some details on which stocks were bought, thanks to Warren Buffett sharing some details during the Berkshire Hathaway Annual Meeting. Let's first talk about some of the purchases that Berkshire made during the quarter that we already knew a little bit of information about, and then we'll jump into some that were revealed during the annual meeting. In March, it was announced that Alleghany Insurance is being acquired by Berkshire for $11.6 billion. The business is New York based and provides primarily business insurance. It's a business that Buffett said he's been observing for over 60 years, which is kind of astounding, and it fits quite nicely alongside Berkshire's other insurance operations. In the meeting, Buffett explained the deal, which came just a week after Munger expressed frustration about not being able to find larger deals.
His question is, what changed from the time you dated the letter to the time the investments were announced? Did the name suddenly become interesting in the space of a month and a half?
No.
Or half a month?
Well, Charlie, you want to give your version? I'll give my version.
Well, my version would be we found some things we prefer to owning to Treasury bills.
Yeah. And as usual, Charlie's given the total answer, but I'll talk longer and say less. Letters dated February 26th, where we were confessing our inability to find anything, which was a Saturday. But the day before that, I got a email. There was a note, just a few lines long, from a fellow that, and he said he'd now become CEO of Alleghany Corp. I'd been following Alleghany Corp for 60 years. I read their annual reports. I had 4 big file drawers full of it because it was an interesting company. But otherwise, if that email hadn't been sent, we would not have made an offer for Alleghany. But that explains the $11 billion.
Now, this is a massive acquisition, but it's actually not included in the $51 billion that they reported on their cash flow statement as being spent on securities. And that's for 2 reasons. One is that it's an acquisition, so it would very likely appear on the acquisition line in the investing activity section rather than within the equity securities section. And 2, the deal actually hasn't closed, so it's very unlikely that Berkshire has actually outlaid any cash for this investment, meaning it's very likely we will see the decline, $11.6 billion in cash, in the next quarter. Then we have their investment in HP. On the 6th of April, HP filed an SEC Form 4 filing that showed Berkshire Hathaway had acquired more than 10% of the stock. And within the filing, it actually showed that Berkshire surpassed 10% on April 1st. So it is very, very likely that the vast majority, if not all of this investment, was made during the first quarter. The total investment, which is now 121 million shares of HPQ, is worth about $4.4 billion. But just looking at the piece that was likely purchased during the first quarter from January to the end of March, it looks like they probably spent approximately $4 billion on their HP investment. Then there were a number of investments that were actually brought up for the first time during the meeting. The first was the significant increase that they made to their Activision investment. Originally, one of the other managers at Berkshire bought 15 million shares of Activision. Then a few weeks later in January, Microsoft announced that they will be acquiring Activision for $68 billion. But there's actually a huge update to this investment. During the meeting, Buffett describes how the trade had become what he calls a workout or a risky arbitrage.
I should make a little news here. So one of the things I bought was bought for a different purpose by a different manager months earlier. He bought roughly 15 million shares of Activision. And I never paid. I knew about the company, but I would just see it at the monthly report. But then on January, 17th or 18th, something like that, Microsoft announced they were going to buy Activision for $95 a share. Now, when they announced that, at that point, Activision becomes a different kind of security. It becomes what Charlie and I used to call, everybody did, 50 years ago, we call them workouts or something like that, and they become known as arbitrage. Well, they're not really arbitrage, but they're securities, they're, in this case, a common stock, whose value depends not on what the market price does, but whether a given corporate event occurs, an announced corporate event occurs. Well, Microsoft wants to buy Activision, we'll say. Well, they said at $95 a share. And they've got the money. And obviously, mergers and big mergers, tech companies, all kinds of things, have got all kinds of problems with the world generally in terms of opinion. So you don't know what the Justice Department will do, or you don't know what the EU will do, and there are all kinds of things. But at that point, it becomes a different security.
Essentially, the value of the stock is dependent on whether a specific corporate event occurs. In this case, if the business is sold to Microsoft for $95 per share, then Berkshire will profit. And if it falls, then it's very likely that the stock will fall as well. We also know it's likely that Buffett was buying around $79 to $80 per share. And this is because in the meeting, he said that the spread was too thin when the announcement was made, but that a few days later, it did become attractive.
In any event, the stock, which had been in the 60s, went up to the 81 or 2, and that looked like not a big enough spread to me for a few days. And then it settled back a little. So anyway, we now own 9.5%, something like 9.5% of Activision.
From that clip, we also know that Berkshire owns about 9.5% of the shares and that the buying was done by Buffett himself. Owning 9.5% of the stock means that they increased their initial investment, which was about 15 million shares, to about 74 million shares. And if we assume an average price of about $79 per share, then their investment was probably around $4.7 billion. Next, we have a big one. This was the biggest investment that they made during the quarter, and that was in Chevron. In this case, we found out about the Chevron investment during the quarterly earnings that were released just before the meeting. As you can see, Chevron became the fourth largest position in their stock portfolio, reaching a value of $25.9 billion. Chevron stock did increase by about 40% during the quarter, but the Berkshire investment increased by about fivefold, from $4.5 billion to $25.9 billion. Again, we don't know the exact amount that they invested because we don't know when during the quarter that they made the investment. However, we do know that it's very likely that they put into the investment about $14 to $19 billion, which by far makes it the biggest investment that Berkshire made in an individual business during the quarter. Alongside Chevron was an investment in Occidental Petroleum, and again, during the meeting, Buffett spoke about this investment.
And they make a lot more money when people are gambling than when they're investing. I mean, it's much better to have somebody that's going to trade 20 times a day and get all excited about it, just like pulling the handle on a slot machine. That's who you may not say that you'd want that person. You'd like the other kind of person too, maybe, but that's where you make the money. And the degree to which the market got dominated by that is shown on a slide I have here somewhere. That shows how we bought. Well, we bought in 2 weeks, thereabouts, 14% of Occidental Petroleum.
In that clip, you can hear that he was able to acquire a 14% stake in Occidental during the quarter. According to Forbes, Berkshire already had about 84 million warrants of Occidental stock that they acquired in 2019 as a part of another deal. And considering that the stock price for Occidental is very similar today or during the quarter than it was back in 2019, Berkshire may have spent up to $7 billion on converting those warrants into shares and essentially acquiring a significant ownership in Occidental Petroleum. And then finally, we have Apple stock, which was another one that was mentioned during the meeting, but was very, very brief.
In the first quarter, they just reported, they're on a fiscal year, but they just reported their March quarter, and they earned more money, and they had fewer shares outstanding. And we actually bought a little more Apple in the first quarter, so we decided we wanted to own a greater interest.
And beyond Buffett briefly mentioning that they invested more money into Apple during the annual meeting, if we look at the quarterly filing, we can also see pretty accurately how much they invested into Apple. Their Apple stake decreased from $161 billion to $159 billion during the quarter, but the stock fell about 2%, which means that Berkshire increased their investment in Apple by about $1 to $2 billion. With some very, and I should stress, very rough estimates of some of these investments, we get to about $35 to $40 $40 billion that are accounted for out of the $50 billion that we can see on the cash flow statement. So there's about 10 to 15 billion that is still unaccounted for. It's entirely possible that this unaccounted for part is the Alleghany investment, but we really won't know for sure until we see the 13F filing. And there's also a $10 billion sale of shares that were not mentioned during the meeting at all, and that we have no record of during the quarterly filing. So again, we'll have to wait for the 13F filing to see what it is exactly that they sold to a significant extent during the quarter. I hope you guys enjoyed today's video, and if you want to stay up to date with content that I'm posting around Berkshire and other content in the future, then make sure you hit that subscribe button. But with that said, hope you guys have a great day. I'll see you in the next one.